I want to show you this. So right here is something that I came across, and it's something very, very interesting. And it says, cost of betting on a stock market crash is cheapest since 2008. Essentially, it says down here, an unusual mix of low implied equity volatility, falling correlation, and high interest rates is helping to make the S&P 500 puts especially cheap. So what does this mean? Well, it means that this is the cheapest time to buy protection or to buy puts that the market will go down. And again, with puts, remember, when you buy a put, it means that if the market goes down, you make money. And the reason why this sticks out to me is that look at the date, 2008. What happened later in 2008 until 2009? We had the financial crisis. So again, buying protection or buying assets that will make you money on the downside, cheapest since 08. We know what happened in late 08. Now, right here's another thing. Dow clinches longest win streak in more than 35 years. Here's what that might mean for U.S. stocks and the economy. The reason I'm bringing this to your attention is 35 years ago, when was the last time the Dow had a 13-day win streak? And right here, January 20th, 1987. Well, we know what happened later in 1987. We had a stock market crash. So again, by no means does this make me think that history definitely will repeat itself, but I think it's a warning sign. It's something that says, hey, maybe we shouldn't chase the market. Maybe we shouldn't be all in bullish. Maybe we should hedge our bets here a little bit, because ultimately these signals are telling us to, in my opinion, be a little careful. Now, I want to walk over here, folks, and I want to tell you guys about something else. So check this out, guys. I had to bring this up. I think it's fascinating. Look at this. This is from 2008, January 17th. Bernanke, Fed is not forecasting a recession. The Federal Reserve Chairman Ben Bernanke on Thursday told lawmakers that even though the U.S. economy is facing a difficult combination of circumstances, the Fed is not forecasting a recession. The U.S. economy remains extraordinarily resilient, the U.S. Central Bank chief said in answering questions after testifying before the House of Representatives Budget Committee. Okay, so in 2008, by the way, this is the same time as what I just showed you, was we had that 13-day win streak in the Dow in these periods. And the volatility, well, that was 1987, but the volatility was the lowest, which is equal to now. You had Ben Bernanke saying the Fed is not forecasting a recession. Well, take a look at just what happened yesterday. Powell says Fed staff is no longer forecasting a recession. All right? So not only is the volatility for buying puts, or the price of puts, as cheap as it was in 08, the same time as Ben Bernanke said this, but you also now have a parallel with puts being equally as cheap and the Fed saying this. Throw into the mix, and I'll flip over here to end this thing, throw into the mix that the Dow has had the longest win streak since 1987 when you had a crash. And to me, it doesn't necessarily mean it's going to repeat, but it certainly makes me aware that something could go amiss here. Right? Everyone is saying it's going to be kumbaya, we're going to be all just relaxing. Heck, they're even talking about aliens now. So again, maybe think about being a little bit more careful, being a little bit more cognizant. Look at both sides of the picture.